Hi, everyone. We are just so honored and excited, as always, to have Tilman Ehrbeck to be our guest speaker to do this fireside chat with us, especially on this special day as we are launching Tech for Good Institute. Now, Tilman is no stranger to Tech for Good. In fact, all of us can learn so much from him because he really is a pioneer in this field. Tilman currently co-manages Flourish Ventures and globally works with purpose-driven founders, investing in actionable ideas that help people improve their economic prospects and financial lives. He serves on the board of a number of portfolio organizations and as chair of the advisory council to the UN Special Advocate for Inclusive Finance. Before Flourish, Tilman was a partner at Omidyar Network, where he built a global financial inclusion team. Prior to that, he served for 5 years as the CEO of CGAP, which is the consultative group to assist the poor. It's a global partnership to advance financial inclusion. And before CGAP, Tilman grew from associate to partner at McKinsey & Company, where he helped build the global financial services there. And also healthcare practices. And he also worked for more than a decade with leading businesses in North America and India. Tilman started his professional journey as a journalist in Germany before earning a PhD in economics from the EU-affiliated European University Institute in Italy and joining the IMF in Washington, D.C. Welcome, Tilman.
Thank you, Illaria, for having me. That's an embarrassing introduction. Yeah. And
well,
sorry
it's
for not being
embarrassingly honest. It's
well, yeah. It's embarrassing also because it spans so many years. And by the way, I'm very sorry that I can't be with you in person in New York.
It's all right. Well, we hope you feel better. And also, given the current situation, we are thankful for technology. And in fact, I cannot think for a better case study on one of the many things that tech could be used for good, where we can connect in a timely manner in this way, where the distance between people are shortened. Now, Tilman, you say it's embarrassing, but I actually think it is a treasure to have spent so much time in an area, have so many experiences and stories, and yet still have unwavering conviction. And what I'm referring to is really your heart for the mission, Tech for Good. You went from being a journalist to obviously IMF, McKinsey, and working with Pierre Omidyar's network. There is just such a wide and rich array of public and private sector experiences. I would love to dive into how you started in this journey, especially kind of your conviction of investing in this field, Tech for Good. Where did it all start and how did it evolve for you to be so committed to this cause?
Mm-hmm. You know, when you go that far back, I probably say that my embrace of technology started in the Economist days. So that's quite some time ago, 20 plus years. And that is for two reasons, and they are economic reasons. The first one is I really felt then, and I still feel, that we need all the tech-led progress and productivity increases that we can possibly get. We need that to include more people in the economy in emerging markets. We needed to provide for aging societies in the advanced economies. And we do need to do all of that while using fewer resources and not depleting our planet. So I am an unabashed technologist. We need technology-led progress and productivity increase. No alternative to that. But I also say, so that's my second economist point, if you will, tech is not necessarily good per se. Tech is actually quite neutral. So you need to have a moral compass and an idea of to what end do we want to use technology? And as society, you have to work and find a political consensus to deal with issues that technology also brings about. The questions around data privacy, the question around the winner takes all dynamics. You need to think about competition policy. And frankly, technology, the winner take all dynamics also create greater pre-tax inequality. And as society, we have to wrestle with that and make sure that nobody is left behind.
Yes. No, I remember in one of your interviews, you talked more about the theme, it's expensive to be poor. And a lot of what you do in investing into purpose-driven fintech is to debunk this myth, to change that reality. I'm curious, when you first started investing in fintech, that is way before what we know now as fintech. Can you talk to us about maybe one of your first investments, whether it was in CGAP or with Omidyar? It doesn't matter. We'd love to hear something that was in the early stage of where we call fintech now, and how has your investment thesis evolved over time on whether you believe in the model of what fintech is trying to do?
Yeah, it was before the term fintech was actually coined. So some 12, 15 years ago, microfinance, microcredit had proven the point that economically active families at the margin of society in emerging markets, that they could be served. They had financial needs and they could be served. But it was hard to scale that, right? So we realized the traditional cash-based, brick and mortar, feet on the street type models would not scale to reach far more people at far lower cost with far better services. And so we knew we need technology. And this was the time when the mobile phone really started its victory march, the 2G feature phone. You remember those flip phones?
Yes.
And we felt like, whoa, something is happening here. And we invested relatively early, not so much in mobile money, because that was really owned, if you will, by the telcos and their special technology. They used the USSD channel, you might remember that. But what they started doing is collecting interesting data, reaching people, and that enabled financial inclusion, new services that previously weren't feasible. Nano credit, short-term, non-collateralized credit based on cell phone data, pay-as-you-go solar, which was really a payment innovation, microinsurance. So we invested in a series of these early applications, if you will, that were riding on mobile money. And the search was always for, can technology enable an innovation that makes everybody better off? The consumer is better off, the new providers are better off, the new intermediaries are better off. It needs to be a triple win proposition so that you can actually see rapid adoption.
Correct. So if you fast forward, if you translate it into the current fintech landscape, which is a lot more mature, there's a lot more volume, startups, investors. Currently, can you think of one fintech case that has really worked well in terms of tech for good? They have really created flourishing for the masses. And I know personally, you guys have invested in a couple as well.
Yeah, what comes to mind? I mean, in the US, definitely, I would argue challenger banks have made a huge difference. So the traditional banking system had minimum balance requirements for checking accounts. It had overdraft fees. It had late fees, unfair things. And it wouldn't even credit you with your paycheck on the same day, right? You have to wait 2-3 days to get that cleared. And we felt 4-5 years ago, there's really no reason why that is the case. You could have transaction banking services in an app on your smartphone, and it can be free, no minimum balance requirements, no overdraft fee, and you can get your deposit, your paycheck deposit, credited on the same day that it's being deposited. That's been a big success, both economically, but also in now starting to nudge the entire incumbent industry. If I think about emerging markets, there's some really neat insurance innovation, things that simply would not have been feasible, again, before the technologies weren't there. So we have an investment in a parametric crop insurance in Africa. It's actually germination insurance. So the farmer buys this insurance coverage with the seed and the fertilizer, and it insures against historical rainfall patterns the germination of the seed. And if that fails, there's an immediate payout, and the farmer can catch the very same planting season still, go back, get a new bag of seed and fertilizers. That is a huge difference. In the olden age, or in the olden days, they would have lost the season and they would have literally gone hungry at the end of the season because they would have exhausted their reserves. And now they can replant. And this is possible because there's low orbiting satellites who collect the right data and who determine parametrically, yep, it didn't rain enough, make a payout via mobile money directly onto the phone of the farmer, and therefore they can act so quickly. Huge impact through these type of innovations.
Absolutely. And not only when you mentioned previously the hidden fees in banks, but what you mentioned in agriculture seems to really be the game changer right now in bridging the rich-poor gap. If these, so like you call it, these factors the risk could be mitigated, and also the efficient bridging of the farmers and the market distributors, which I know our other speaker, Shamina, also is passionate about startups like that, who could really help farmers eliminate the middleman. So wonderful to hear those examples. Tilman, what might not work, in some of these tech for good startups, whether it's fintech or not, it doesn't matter. But what are some things that you think we should watch out for in this tech revolution age currently?
Yeah, I think it's super important that all of these innovations, and in particular the underlying business models and the revenue models, need to be aligned with the ultimate health of the customer and the consumer. There can't be a disconnect between the business model and consumer financial health. In the credit arena, for example, we have to watch out for that, right? So there's a lot of credit extended based on alternative data that previously wasn't available. And in many instances, that's fantastic because it extends credit to people who otherwise would not have gotten it before. It's particularly true for small businesses in the informal economy in emerging markets. But on the consumer side, it can lead to new forms of exclusion, algorithmic bias, over-indebtedness. So I come back to this theme that tech is actually neutral. You have to make sure that you work within the right parameters to harness the good that it can do.
Well said, which really does highlight why we do hope to come together very intentionally, to make sure that happens. Time's running short. I'll ask you the last question. We are a Southeast Asia focus institute. We would love to make sure that we can enhance and improve the lives of people in Southeast Asia. In a recent interview with Deal Street Asia, you mentioned that you see big promises in Southeast Asia's fintech innovation, where we may borrow multiple influences from fintech ecosystems across US, China, and India. Now, for people out there who haven't yet read the article, would you mind telling us briefly about how this could be done?
Yeah, we are very excited about Southeast Asia for a number of reasons. So if you compare it to India, for example, per capita income in Southeast Asia, in the emerging markets of Southeast Asia, is actually higher than India. Mobile phone penetration is higher, yet traditional banking penetration is lower. So there's a real opportunity here to borrow some of the insights that came out of the Chinese markets 5, 7, 10 years ago, in particular in what we call embedded finance. This notion that non-traditionally financial platforms that are important in people's lives, be it farmers, be it gig economy workers, be it small businesses, platforms that help them in their daily lives are actually the natural owners of good chunks of retail financial services. They have customers, they have high engagement, they have often proprietary data that help with underwriting, either credit or insurance. So this embedded finance thesis, we believe, is going to play out more prominently actually in Southeast Asia than in other markets. India is actually very well banked. It's also more in the Anglo-Saxon tradition of separating commerce from finance. So Southeast Asia has this opportunity to leapfrog and borrow the best components from financial systems around the world. What they can borrow from India, is the notion of an public digital infrastructure that lowers the barriers to entry and the costs to everyone. So this combination of embedded finance borrowed from China, public digital infrastructure, open finance, open data borrowed from India, that could be a very powerful combination in Southeast Asia.
I love the word leapfrog, and I really hope that is the case for our region as Southeast Asia also recovers from the effects of COVID. Thank you, Tilman. I'm so sorry again that you can't be with us in person. I hope you get better soon, but we look forward to in the near future that we can actually all get together in person.
Okay, same here. Bye for now.
Thank you.